And so they play a very key part. And all this suggests that it's on a fast growth track, SME. Okay? And at the same time, banks also seem to have adequate liquidity. But for some strange reason, when an SME goes to a bank, invariably you will find that there's a huge divide, there's a huge disconnect. And there are various reasons for that. We'll quickly explore what are these reasons that for this disconnect and whether there are ways to bridge it. See, I've just listed just a sampling of some of the concerns that banks have. Lack of adequate transparency. There still isn't a vibrant or robust atmosphere. A lot of the auditing firms, unfortunately, especially the three-tier ones and all, the quality of audit is suspect, and therefore banks just don't seem to have the confidence to go purely on the basis of that. Governance was mentioned about even in investment, but governance is a long way to go on the governance front. And there are rampant malpractices. It's unfortunate. It's a chicken and egg situation. Sometimes the SME says, if the banks were more cooperative, I wouldn't have to do this. The banks say, if they were straightforward, I wouldn't have to do that. But the fact remains, I've been a banker for a long time. 25 years ago, I used to be a relationship officer in Sharjah, HSBC, tramping the streets, meeting SMEs, lending, and I used to see firsthand how, checks are being exchanged, post-dated checks, because those could be discounted with no underlying transaction. Okay? So those are the things that don't give confidence to banks. Absence of bankruptcy law. The unfortunate thing is, especially because a large number of businesses owned by expats, if things go wrong, unlike in other economies where somebody tries to sort it out, here there's a runaway case. It's also partly due to the bankruptcy laws, absence of bankruptcy laws, in which case, a person has an option to either be behind bars or because there's no such thing as Chapter 11 or, declaring oneself insolvent or that sort of a thing. And a lack of credit agency. In more mature economies, the Western world, you have a Dun & Bradstreet, you have, even small entities being rated, and that gives a lot of confidence to every player in the economy as to how far they can go in the lending process. Here, that was lacking. I've just given a very, very simple depiction. Banks, were sort of lending more on the purchase side, on the the LC, TR, letters of credit and trust receipts on the purchase side. And there was a very clear mismatch because most of the sales were happening on credit. Right? Now, the only product till a few years ago was post-dated check discounting. Okay, that was a common mechanism. But if you think about it, just for example, let's take you were dealing in vegetable and fruit. Okay? So you were bringing vegetable and fruits from, say, Holland and Africa, and you were selling. Now, you sold to Spinneys, you sold to Lulu, you also sold to Abdullah Grocery next door. Right? Abdullah Grocery would give you a post-dated check, okay? But Spinneys and Lulu would not. Right? And those are your key customers. Right? So you had a huge chunks of your sales, which was not being facilitated by any facility. And so there was a cash strap. Right? And it used to, I was handling, over the years, I became the corporate manager for Sharjah and Northern Emirates for HSBC, and it was every day bugging me as to how are we going to address this issue. And then when I was, investigating into this, I realized in the Western world, Netherlands is a prime example, factoring, which has been around for many, many years, okay, is now taken over 70 to 80% in those days, today it's probably higher, of working capital funding for SMEs. Okay? It's as high as that, because all open account trade, less of LC denominated business, and largely open account. Spent a few months in the UK, studied the product, because the UK is sort of a center of excellence for factoring. I had to come back, I had to modify it hugely for the local environment to get over the fact that there was no credit insurance in those days, there was no rating agency, and the assignment laws, but I'll come to that in a bit. So factoring, many of you may have just about heard about it. While it's a very, very old product, in this region it's still relatively new. Yeah? And even though I was the first one to launch it in 2003, even today I spend a lot of time with banks in still educating them on factoring, because it is still not a product that has taken off. Okay? I'm 100% confident in a few years it's going to be a very robust product here as well, because there's always a bit of a gap between the Western world and it's sort of getting, matured over here, but all the steps are happening in the right direction. I'm going to spend just a couple of minutes on the definition of factoring, just so that everybody is on the same page. Yeah? So in a simple way, it's a contract between the seller of goods or services, and a financial institution, which could be a bank, but we call it a factor. Right? So receivables from the buyer are assigned to the factor, right? And against that assignment, the factor gives several services. Now, for my definition purposes, I've said at least two of the following services, and I've said finance, credit vetting, ledger, follow-up. Now, if it was only one, if it was only finance, it would be invoice discounting, right? If it was only credit vetting, it would be like a credit agency. If it was ledger management, it would be like any bookkeeping company. Right? If it was follow-up for collection, it would be like a collection agency. And if it was protection, it would be like an insurance company. Right? It is this combination that makes it such a powerful and robust product for financial institutions, because you are actually encapsulating different aspects, different spheres of this activity into one single product that makes it a powerhouse and gives comfort to a factor to lend. But it's got to be done correctly. And I'm going to dwell a little bit more, because ever so often I get asked, how is factoring different from invoice discount? The two are worlds apart. Okay? Invoice discounting, I mean, I'll give my personal example. I was funding the first logging operation in the UAE, and we were discounting invoices. They were supplying to large contractors, and I was discounting those. Things went a little wrong with the logging for whatever reason. When I actually went to collect, I found the monies had been paid a long time ago. I also found that the same invoice had been discounted in several banks. Okay, and that's very common. Now, factoring goes well beyond this. Okay? One is the perfection of assignment. I'm not going to get too technical, but the laws on assignment in the UAE are pretty robust. Okay? It's a little different from the Western world. The buyer has to be notified. Okay? And that's a huge improvement in the last few years, because many years ago, the buyer had to acknowledge that assignment. Now it is just a simple notification, and that perfects the assignment. So it is legally enforceable. Tomorrow I can actually go to a buyer and say, look, this had been assigned to me, you have to pay. And I have proven this time and again. We've had runaway cases in the last years ever so often, and in factoring, we have always recovered our monies. Then survey, it's a survey function. Before we set up factoring, we actually go to the seller's office, we go through the ledgers, we actually go back right from purchase order to payment received, what is the cycle, we decide what's the track record with each buyer, each debtor, and then only we decide which debtors we can take and for how much. Okay? Now that adds a lot of robustness into the whole structure. Then the structure of facilities. So when I say structure of facilities, we say, okay, just let's take Carrefour, for example. Do you know that if you produce an invoice to Carrefour, take a guess how much you get for it, eventually, the seller? 50%. Okay? They have something known as listing fee. You want to put this pet on Carrefour, right? They'll say, yeah, sure, you can do that. 1,000 dirham listing fees. Okay? I say, no, but I have not only silver color, I have red color, blue color, green color. Okay, that's 4 items, 4,000 dirhams. We have 40 outlets, that's 160,000 dirhams. Okay, I know you. I said, what's my margin? How will I pay 160,000? They said, no, that's okay. And every invoice we will deduct 20%. Okay. Then they have shelving space. They have, merchandising fees. They have back to school promotion twice a year. So by the time all the deductions happen, you're going to get 50% of that invoice. Now, it's only in the survey process I come to know that, okay, this invoice, if I factor this invoice, only 50% of that is going to come back. Okay? So I will put only a 50% prepayment structure. Okay? So structuring only comes about when you start becoming actually a part of the business, as opposed to just a financier, you actually start engaging into part of the business. Then the structure facility more, in invoice discounting, what used to happen, 90 days. Okay, 90 days we debit the account regardless of whether payment has come or not. Here, I am actually I'm becoming a part of the collection process. If payment has not come, I'm not going to debit your account. Right? I'm going to follow up with the buyer till the payment comes. Of course, there are certain benchmarks. After about, say, 30 days beyond the due date or something, I will take a call. But those aspects are there so that suddenly the business is not hit with a cash crunch. Right? Validation of large value invoices. We have certain benchmarks. Any good factoring company would have certain benchmarks in which they say, okay, invoices over $100,000, they will actually give a call to spinneys and say, okay, that consignment that you received, was it in order? Okay, I hope you know payment is due in 60 days. So those are validation processes. So all that fresh air invoices that I talked about a little bit before largely gets negated. And the very fact that, the financial institution is becoming a partner in the business. You talk to any SME today and you say, what is the most difficult part of your business, right? And 9 out of 10, I can guarantee you will tell that my receivable management is the most difficult, my collection management is the most difficult. I'll give you a very interesting actual business case. One of my early day clients was a florist, okay? Somebody used to deal in flowers. They used to airship flowers from Holland and from South Africa on a daily basis. And in those days, he used to supply to Ajman Kempinski. He used to supply to, I don't know whether it was Chicago Beach or Jumeirah Beach in those days. But anyway, he used to supply flowers to these 3 or 4 big hotels. He found that he could not expand his business even though there was demand from other hotels because his cash flow didn't sustain it, right? He came to us for factoring. Now, I managed, I could see this firsthand, 8 million dirhams turnover on the year that he came to factoring. 3 years later, his turnover was 54 million. Okay? Imagine Ajman Kempinski, typically in the past, and the 60th day falls due, the invoice falls due, they would say, oh, signatory is not there, drag it to 90 days, 120 days. And in the meantime, he can't import any more flowers, right? As a factor, I gave him payment on day 1, right, of the invoice being raised. Straight away, it gave him more cash flow. And then you imagine an HSBC or a Mashrak or a Stanchart calling Ajman Kempinski on due date and saying, look, please, you've got to make payment. They might still delay, but they'll delay for 5 days or 10 days, right? But they're not going to delay like they used to bully in the past a small SME. So it adds a lot of robustness to the entire process. This more or less says some of the things that I talked about. It frees up liquidity in a big way. So it's really a win-win situation because on the one hand, it's giving a lot of comfort to the funder because he's getting to be a part of the business. There is no longer that lack of transparency. There's so much of control on the cash flow. The cash is actually coming into their account because it's been assigned to them. Okay, so if there's a delay, he knows the reasons for the delay to a large extent in most of the cases. To the trader, it releases, of course, liquidity. It adds a lot of value in the credit rating of debtors. See, imagine a factor, he deals with 2,000, 5,000, 10,000 debtors in the market. So if I say I'm not going to take this debtor, it's a clear indication to the seller that, look, there's a problem with this debtor, don't sell. Or sell only up to this amount, they're comfortable only up to this amount. Okay? That's a huge value add to the trader. cross-check. Huge amount of time used to be spent on reconciliations. Between seller buyer, there's always a little bit of this credit note was raised on 15th. What happened to that? The factor actually gets involved in these reconciliations. They actually run a parallel ledger. So the ledger of the seller and the ledger of the bank generally seem to match. This good cop, bad cop. Once again, you can take the case of that florist. Okay. Sometimes he would say, look, please put pressure. Even if they complain, they'll come to me. You actually better the relationship between the seller and the buyer, because the factor acts as the bad cop while the seller can continue to act as the good cop. And he had about 4 or 5 people doing his collection management. After he took factoring, it was whittled down to only 1, because a lot of that collection activity and the ledgering activity had been taken over by the factor. And very, very important, especially in these troubled times, n number of times, I have seen sellers thanking their lucky stars that they took factoring, because beyond a point when the buyer itself has run away, they have not been out of pocket. It comes for a fee, but it's sometimes well worth that fee. And yes, that last bit is very important. Actually, factors, because they become a part of the business, when they see, okay, today his Carrefour has opened 1 more branch, so he will need to increase his sales by another 4% or 5% or 7%. They will straight away increase that facility, factoring facility, because they've already got a track record. They've already built up a comfort level that we know exactly what is going on. So that, in a nutshell, there are, of course, a lot of challenges to factoring in the Middle East, and some of them I've already mentioned, and I've just listed it over here. Okay. But the big improvements have been in the assignment laws. Assignment laws today, like I said, notification to debtor is adequate. And slowly the awareness, you will not believe it. My first factoring client was a chemical trader, right? When we sent out those assignment notifications, and I'm talking of 2004, okay, when we sent out that notification, a lot of the buyers got worried and called saying, what is this we have received from the bank? Is the seller gone? So we actually had an event like this one in a hotel, called all the buyers, and I put my hand around the seller, this chemical guy, and I said, look, we are partners, okay? And nothing is wrong with him. He's not into liquidation, and you all will continue to receive supplies. So from that time, when this was such an alien concept, we've come a long way. Okay? Now there's a lot more comfort in this whole process. There's a lot more awareness in the market, and the MNCs of the world are very, very comfortable, because generally MNCs have come from a Western background, so they are familiar with these systems. And for a bank, it is so comfortable to know that the risk is actually in some ways being transferred from that SME to an MNC. Right? Because after all, the MNC is going to be the obligor, he's going to be the final paymast. Credit rating agency, I don't think many of you in this room will appreciate how much work this Etihad Credit Bureau has done. Each of us are going to start realizing right from forget about your credit card payment history or your check return history. Even your utility bills are going to get captured. Your payment of utility bills, Etisalat and Diva, etc., or Siva, is going to get captured by the Etihad Credit Bureau, and it's all going to add to your rating. Okay? So Etihad Credit Rating Bureau in the coming years is going to be a huge player, and it's going to add so much more comfort to the lenders as well. Credit insurance, earlier there used to be just the one player when I started. Now there are a whole slew of insurance companies that give credit receivables. There are inadequacies, and it's a process of evolution. Some of the insurers are not so forthcoming in their claim payment, but those niggles are slowly getting sorted out, and we are certainly in a very positive direction on that front. So these are some of the challenges, and I've already covered that a lot of these are being improved upon. Most of these I've talked about. the last one is something that, there is still a huge paucity. For every one good factor, and I'm very sorry to say that, that barely there are about 5 or 6 banks today that are offering factoring in the true sense. There must be at least another 10 or 12 who claim that they're offering factoring, and that actually dilutes the product a lot, because they're not offering factoring, but they are spoiling the efforts of the 5 or 6 that are. The good part is awareness is growing. I mean, I run a financial advisory now, and I've been approached by 2 or 3 banks to help them in the setup or to improve their existing setup. So I know that at least the trend is in the positive direction. I've tried to expedite this, and I think I've more or less succeeded, because my mantra to all the banks used to be, if there is one product that you give to the SMEs, make sure it is factoring. Right? And fortunately, 4 or 5 of the banks have seen that proof of concept actually happen. But traders will also have to sort of work hand in hand, because they do have to accept the bank as a partner in their business, but it's a win-win situation if that happens. I'm happy to answer any questions if anyone has. Thank you. Thank you. I'll take questions in the lounge later.
But please stay there. We'd like to honor you for your time, your talent, your initiatives, your contributions to the industry. Mr. Anup, Mr. Sajid, Ms. Monica, a gesture of appreciation. All right. In the meanwhile, I'm going to start preparing for UAE governance challenges and solutions for small and medium enterprises. Mr. Vijay Kumar Oja, Company Secretary of the Sharaf Group. Mr. Vijay Oja has several credentials to his talent. He's the Company Secretary, Governance, Legal and Compliance Officer of the Sharaf Group in the UAE. He is also a fellow member of the Institute of Company Secretaries and graduated in Law and Management. He's currently working as Company Secretary and Compliance Officer of the Sharaf Group, as I earlier mentioned, in the UAE. He's a regular speaker and presenter on these important subjects, such as governance, legal, compliance, and secretarial professions. Obviously, if anyone would like to know further about the compliance, the legalities, company secretaries, a subject without which we cannot move forward in this era of doing business when it comes to regulations and FIIs and FIPs and FDIs, he's the right man to catch. Over to Mr. Vijay Oja.
Thank you. Thank you for introductions. Good afternoon, everybody. Since morning, we have good speaker among us who has guided us a lot of things which is happening here in UAE as well